Hi everyone, welcome to today's live analysis brought to you by IC Markets. Right, before we start today's webinar, here's a look at the disclaimer. And please take note that this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. My name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, take note this week we will have shorter trading hours as well, especially with Christmas falling on Wednesday, 25th of December. There's going to be a lot of early closures for financial markets on Tuesday, 24th of December, as well as Thursday as well. Boxing Day, many banks and financial markets will also be closed on Thursday, and we'll get a full resumption of trading on Friday the 27th. So in between is going to be pretty trading activity is going to be fairly muted, and we can also expect very thin trading liquidity as well. So just be mindful of that. All right. In terms of the economic calendar, there's a few things going on. We've got US GDP data out later today, alongside US consumer confidence. That's on Monday, 23rd of December. And we also have the unemployment claims coming out on Thursday, the 26th of December here. So this is the calendar for this week, right? There's quite a couple of things going on, but especially with the shorter trading hours, right? We can definitely expect muted trading activity as well as thin trading volume as well. All right, now let's move on over to the charts and trading view, right? And we'll begin the analysis on the dollar index. Right, so we can see here over the last 3 weeks, right? If you look at it on a weekly time frame, we can see that after falling sharply in the final week of November, right, the dollar index stabilized around 105.80 and has staged a very strong rebound since then. Right, if you look at it from trough to peak, it had risen nearly 3% last week before finally making a gain of 1.9%, right, raising about 20 pips or so over this process here. Oh, sorry, not 20 pips, about 200 pips. So we can see last 3 weeks have seen a strong demand for the dollar, pushing the dollar index up. And this week as well, we can see demand for the dollar remaining relatively strong. It opened at around 107.78, dropped as low as about 107.68, and demand looks to be remaining pretty much intact. Right, so for today, right, on the daily time frame, I've identified a pullback support at 107.49, which has been identified as a pivot. Right, you can see here previously the dollar index running the resistance in the third week of November at around 107.50, and after making a bullish breakout last week on Wednesday, 18th of December, this level could now potentially function as a pullback support, which is also accompanied by a Fibonacci retracement at 38.2%. We can see that this retracement was found by beginning from here, 6th of December, the swing low on 6th of December, going up to the high of last Friday. We can see that the 38.2% retracement aligns very well with the pivot, which is a pullback support. And we can also see the 61.8% Fibonacci retracement aligning pretty well with another pullback support at 106.47, which has been identified as the first resistance, and of course as a first support. And of course, the first resistance is the swing high that has taken place last Friday. That's at 108.48. Right, hi Ajay, good to see you as well. Right, and if you have any requests for any other instruments, please do drop them in the chat box. Right, of course we'll be starting off with the dollar index, looking through a few of the major currency pairs, switching over to the commodities, and then looking at indices, and then we'll look at crypto as well. And of course, in between, should you have any other requests, do drop them in the chat box, and I'll be more than happy to go through the analysis with you. Right, so these are the key levels for the dollar index. Demand for the dollar has has increased significantly since the beginning of October, pushing the dollar index from just under 100, or just around 100, sorry, not under 100, just around 100, to as high as 108.50. Right, this move alone from the end of September, oops, hang on. This move alone from the end of September till last Friday was as high as 8.4%, right, with the dollar index gaining about 840 pips over the duration here. So very strong demand for the dollar index. And as the index continues to trade above the green Ichimoku cloud, right, the green Ichimoku cloud also highlights the current ongoing bullish momentum. So we're looking for a potential bullish bounce of the pullback support at 107.49, which has been identified as the pivot, which is accompanied by a Fibonacci retracement at 38.2%. First resistance is at 108.48, which is the swing high resistance that was formed last week. And of course, the first support at 106.47 is another pullback support level that's aligned, that is accompanied by a Fibonacci retracement at 61.8%. Now, beyond the first resistance, right, beyond the first resistance, where could we identify the next possible resistance barrier? Take note, 108.50 is a level last seen in November of 2022, so that's nearly 2 years ago. So beyond that, let me see, where could we identify the next major resistance barrier? Where I do see that could come in is at this pullback resistance. And it's a pretty decent pullback resistance here at 109.58. This is where potentially the second or the next resistance barrier could be formed beyond the first resistance. Now, on this nice downtrend here, I'm also going to run a Fibonacci retracement starting from this swing high on 22nd of November, going down to the swing low on the 6th of December. We're going to be looking out for key extension levels, which sit at 127 and 161%. Right, we can see the first resistance, right, sits close to the 127% extension level, and of course the second resistance as well, which is a pullback resistance, sits pretty close to the 161.8% extension. Right, so you can see these are the key support and resistance levels for the dollar index. And with demand for the dollar remaining strong, this index is likely to remain elevated for most parts of this week. Okay, that's that's the dollar index. We'll move on over now to the euro. We'll touch on dollar yen, and then we'll head on over to the commodities. Looking at the euro, right, if we can see that there's a nice pullback resistance level at 1.0460, which has been identified as the pivot, and is also accompanied by a Fibonacci retracement at 38.2%. This retracement level was found by starting from here, this high on 6th of December, going down to the low of 18 December here, and we have the 38.2% retracement aligning very well with the pullback resistance. We can also identify a nice descending trend line that's been in place since 30th of September, and of course with this currency pair continuing to trade underneath the red Ichimoku cloud, it highlights the current ongoing bearish momentum as well. First support is very clear, it's at 1.0333. It's the swing low support that has taken place on Thursday, 21st of November. And higher up, the first resistance sits at 1.0598, which is like a pullback resistance level that's been in place since 18th of November, and is also accompanied by a Fibonacci retracement at 50%. This retracement was found by starting from here, this swing high on 50th of, starting from this swing high on 6th of November, going down to swing low on the 22nd of November. Alright, hi Ajay, you've got a request for the Kiwi, dollar CAD, dollar franc, and cable as well, right? So, alright, great, we'll get to that as well. Right, so we'll go down the order now. So these are the key levels for the euro on a daily time frame, right? Any retracement to the upside for this currency pair is likely to be restricted at around the 38.2% Fibonacci retracement, which is where the pullback resistance has been identified. Remember to take note that the pivot is actually a pullback resistance that's accompanied by a Fibonacci retracement at 38.2%. Now let's move on over to the euro, and we can see a similar market structure as well. Right, we can see that this currency pair also continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. We can probably draw a pretty decent descending trend line as well here. Right, we do have a descending trend line with a few touches, right, especially in second week of December and last week. Right, so with this currency pair continuing to trade underneath both the descending trend line and the red Ichimoku cloud, highlights the ongoing bearish momentum. And we can see this currency pair, the cable was attempting to rise higher today, but it looks to have run out of steam at the present moment, right? And then when I look above at 1.2616, I can see a nice overlap resistance. For this currency pair, I see nice overlap resistance which is accompanied by Fibonacci retracement. Let me see, this is not so clear, at 38.2%. It's a Fibonacci retracement at 38.2%. So we're looking for cable to potentially stall around this level, right? Potentially stall around this level, which is the pivot. It's an overlap resistance that's accompanied by Fibonacci retracement at 38.2%. Sitting higher up, I guess, let me see if there's something else, right? We can actually use the 38 and 78.6% retracement levels, because we can also see there's a pretty decent overlap resistance, right? Actually, if I can stretch it all the way here, right, to see a nice overlap resistance at 1.2732, which is also accompanied by Fibonacci retracement at 78.6%. Right, and of course, in terms of support, 1.2488 is a nice multi-swing low support, with the first taking place on 22nd of November, and of course the most recent one taking place last Friday. Right, so these are the key support and resistance levels for the cable on the daily time frame, and this currency pair continues to trade in a prolonged downtrend. Right, we clearly see a series of lower highs and lower lows, and any restrictions, any retracements to the upside are likely to be constrained by the red Ichimoku cloud, the descending trend line, as well as the overlap resistance, which is the pivot. All right, let's move on over to dollar franc. Looking at dollar franc, after dropping quite sharply on Thursday and Friday, this currency pair gapped lower, right? It gapped lower to open at 109.14, but it has filled that gap very easily, rising as high as 89.51, right? And it looks like the demand for the dollar is strong, right? And franc is looking very weak as well, right? Especially after a surprise rate cut about 2 weeks ago, right? The Swiss National Bank made a larger than expected rate cut. I believe they were expected to make a 25 basis point reduction, but instead they moved with a jumbo 50 basis points, and that really caused the franc to weaken significantly. Right, so we can see that this currency pair also continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum. Right, we can see last week, Wednesday and Thursday, it came close to a swing high resistance. Right, there's a nice swing high resistance that had taken place in early July. Right, nice swing high resistance here, and it's a region where dollar franc once again stalled last Wednesday and Thursday. And this level is also accompanied by a Fibonacci extension at 127%. Now, this extension level was found by running a retracement from this high on 22nd of November, going down to this swing low on the 6th of December, and you can see that the extension at 137% sits pretty close to where the swing high resistance sits. And looking higher up, right, let's see, out of curiosity, let's see where the 161% extension sits. Right, it sits at 91.02, right, close to this little pullback level here. But probably if I were to identify the next resistance beyond 90.40, I would identify it here, which is at 91.57, but I wouldn't use the 61.8% retracement. Actually, I probably can, because there does look like a pretty decent overlap resistance at around 90.88, right? So we can use the extension at 161%. Now looking a little bit below, right, as US dollar franc gap lower this morning, I was expecting it to drop a little bit further, right, down towards the pivot level at 86.64, which is actually a pullback support level here, right? We can see a little resistance here on 3rd of December, and then once the bullish breakout occurred on 12th of December, this level can now potentially function as a nice pullback area. It is also accompanied by retracement at 50%, Fibonacci retracement at 50%. We found this retracement by starting from this swing low on 6th of December, going up to the high of last Thursday, and we can see that the 50% retracement aligns pretty well with the pivot, which is a pullback support level. And of course, looking a little bit below, there's a nice overlap level at 87.67, right? Actually, if you look, you can probably stretch it all the way here. Very nice overlap level as well, right? And we can probably run one more Fibonacci retracement starting from this swing low, 6th of September, going up to the high on the 19th of December. Let's look at all the fibs. We can see that the first support is also accompanied by Fibonacci retracement at 38%, and we can also see that the pivot is also accompanied by an additional retracement at 23.6%. So let's keep 23 and 38. Right, so the pivot level is a pullback support that's accompanied by a 50% retracement and 23.6% retracement. This forms the Fibonacci confluence. And first support is an overlap level at 87.48, which is accompanied by Fibonacci retracement at 38.2%. Right, so these are the key levels here for dollar franc. Right, so if you've gone long on dollar franc today, right, perhaps you're trying to play taking an opportunity to close the gap, right, playing the gap. And if you're still long on dollar franc, right, remember identifying your take profit target at around 90 cents would be a suitable area to do so, right? A suitable area to do so around here, this 90 cents area here. Right, then let's see, moving on next, right? Ajay, you wanted to look at dollar CAD and the Aussie as well, so let's move on over to these currency pairs. Dollar CAD as well, right? After hitting a high of 1.4468 last Friday, oh sorry, not last Thursday, this currency pair has pulled back, dropping towards its pivot level at 1.4327. Now for this pivot level, we have to zoom out and head back over to March of 2020, and we can see that this is a pretty decent overlap. This level previously functioned as a pretty decent overlap resistance, which is now likely to function as a overlap support here. And of course, the first resistance is a swing high resistance level that had taken place in March of 2020 as well. So we're looking for a potential bullish bounce of the overlap support, which is the pivot for dollar CAD. And we can also see this currency pair continues to trade in a strong bullish uptrend, and at the same time the bullish momentum is highlighted by the green Ichimoku cloud. Now on this uptrend here that begins from 25th of September, we can run a Fibonacci retracement from this swing low to the swing high of last Thursday. And when we look at all the Fibonacci retracements, we can see that they don't really align well with the pivot of the first support, so that's fine, right? We don't force the Fibonacci analysis on Fibonacci levels onto the analysis if they don't align close to the predefined support or resistances, right? The Fibonacci levels are used as an additional supporting factor rather than identifying the support and resistance outright. Okay, so these are the key levels here for the dollar CAD. Yep, and we can see with demand for the dollar remaining strong, this currency pair is likely to remain elevated above the overlap support, which is the pivot. And should it continue to rise higher, identifying your take profit target, first take profit target at last Thursday's high would be a suitable area to do so. And of course, if it does continue to climb even higher, you can then target the first resistance at 1.4517 as the next potential take profit target. All right, so that's dollar CAD done. Now let's move on over to the Aussie. Looking at the Aussie, right, you can see it's clearly trading in a downtrend underneath the red Ichimoku cloud, and at the same time underneath descending trend line as well. Actually, this might even turn out to be a bearish channel, right? A very clearly defined bearish channel, I believe. Yep, there we go. This is a very nice defined bearish channel for the Aussie. Right now it has retraced higher since last Thursday. However, with the Aussie continuing to trade in the bearish channel and underneath the red Ichimoku cloud, this pivot at 62.62 could potentially function as a resistance barrier here. Right, maybe actually where I look at it as a much stronger resistance barrier is probably a little bit higher up. Right, it's probably a little bit higher up. This pullback, this previous multi-swing low support that had been in place from 3rd of October till 26th of October could now potentially function as a pullback resistance area. And I believe is there a 23.6% that we can use? Yep, there is a 23.6% retracement that we could use. So we have the intersection. We have the intersection of the pullback resistance and a 23.6% Fibonacci retracement to help us identify a potential resistance barrier for any retracements for the Aussie to the upside. So if the Aussie does stall around 62.80, that may help us identify a potential entry for the short trade, because we can probably expect the downtrend to resume. Right, higher up, the first resistance at 63.49 is also another pullback resistance level that's accompanied by a Fibonacci retracement at 38.2%. Right, slightly higher up, let's see if there's other retracements that we can use. Let's try one from here, 7th of November. down to 19th of December. No, nothing. None of these retracement levels are all just in between. Let's see from on this major downtrend here. No, probably not. Okay, that's fine. So once again, we after this prolonged downtrend for the Aussie, we are seeing a retracement to the upside over the last 3 days. This is a huge downward move for the Aussie from peak to trough. It has lost 10.7% or almost 750 pips. Huge move down since the beginning of October, right? So we can definitely expect the Aussie to retrace higher right after strong selling days, right? We can expect it to retrace higher, and at the same time, not only do we have the pivot, which is a pullback resistance at a 23.6% Fibonacci retracement, identifying a potential resistance barrier, we also have the upper trend line of the bearish channel that can also help us identify a potential resistance area as well. Remember, we can see several times since 7th of November, the Aussie has retraced higher but has run into resistance close to the upper trend line of the bearish channel as well. Alright, so these are the key levels for the Aussie here on the daily time frame. Right, okay, so with that, we've covered most of the major currency pairs. Right, Ajay, I hope that's been useful for you. And then now we'll move on over to the commodities, starting with gold. Then we'll take a look at crude oil as well before moving over to the indices. All right, looking at gold, right? Looking at gold, we can see since 12th of December, it has fallen from about 2,720 to as low as 2,585 on 19th of December, right? Dropping almost 5.2%. However, we saw gold prices recover on Thursday, rebounding strongly on Friday, and look to be edging higher today as well. Now, any retracement to the upside could potentially stall at the pivot. The pivot is a nice overlap resistance at $2,615 per ounce, and it's also accompanied by a Fibonacci retracement at 50%. So this retracement level was found starting from this swing high on 12th of December, going down to the swing low here on the 18th of December. We can see the 50% retracement aligning very well with the overlap resistance, which is the pivot. So any retracement to the upside for gold could likely stall around this level here and probably pull back a little bit more. Now, in terms of first support, right? First support, actually see a nice overlap support here, right? It's almost like an overlap support level at 2,531. Right, we can see gold running to resistance here from 20th of August till the 11th of September. And then after that, we can see a nice swing low being formed on 13th of November. Here, a nice swing low being formed, so resistance here in end August, early September. A nice swing low bounce here in mid-November, creating a pretty decent overlap level, which is also accompanied by Fibonacci retracement at 50%. This retracement level was found by starting from here, this swing low on 7th of June, going up to the intraday all-time high that was formed on Thursday, 31st of October. And we can see the 50% retracement aligning pretty well with the overlap support. Right, so these are the key levels here for spot gold. Right, looks like any retracement to the upside could be limited, and this could stall or be restricted at the overlap resistance, which is accompanied by the 50% Fibonacci retracement. All right, now let's move on over to the indices, starting with US 30. Right, US 30 has suffered 11 consecutive down days, 11 consecutive trading days of closing in the red since 5th of December. However, Friday we saw stabilization for this index, rising as high as 43,200 before finally closing at around 42,770. Today, as markets reopened, it gapped higher, climbing as high as 43,042, but it looks to be pulling back now as we speak, and looks to be attempting to close the gap as well. Now, in terms of support, actually I see a nice overlap level. And I see a nice overlap level here at around 41,604. Right, so perhaps any could this gap be filled? perhaps, and the downward pressure remains for this index, we could see US 30 slide close towards the first support here. Higher up, the pivot has been identified as an overlap resistance at 43,330, which has been which is also accompanied by Fibonacci retracement at 38.2%. So this retracement was found starting from this intraday all-time high on 4th of December down to the swing low of last Friday. Right, and we can also see the 78.6% retracement accompanying another pullback resistance at 44,327. This is where the first resistance has been identified. In addition, we've also used a Fibonacci projection starting from point 1. Oops, hang on. There we go. Starting from point 1 on 19th of November, going up to point 2, 4th of December, and ending at point 3, which is 20th of December. We can see the 61.8% projection aligning well with the pivot, and the 100% projection sitting quite close to the first resistance. Now on this uptrend here, we can also run a Fibonacci retracement from this swing low on 5th of August, going up to the intraday all-time high. And when we look at all the fibs, we can see that the 50% retracement also aligns pretty well with the first support. Right. So before markets open today, right, I'm expecting US 30 to continue to retrace higher, and thinking it would stall at this overlap resistance, which is where the pivot has been identified. So it had gapped higher and climbed above 43,000 briefly, but it looks like it is it is now retreating and looking to fill the gap. All right, now let's move on over to DE40, which tracks the DAX futures. Right, so for the DAX as well, we can see this is now 2, 4, 6, 8. What is it? 1, 2, 3, 4, 5, 6, 7, 8 consecutive down days here. Okay, not including today, right? Not including today. We've seen 7 consecutive down days for the DAX, bouncing off 19,664 quite strongly last Friday, 20th of December. This level here was previously swing high resistance, almost like a multi-swing high resistance that was first formed 21st of October, then again on 30th of October. And once the bullish breakout took place on 2nd of December, this level then proceeded to function as a strong support on the 20th of December, creating a nice overlap level. So the pivot at 19,664 is an overlap support that's accompanied by Fibonacci retracement at 50%. This retracement was found starting from this swing low here on 19th of November, going up to the intraday all-time high on the 13th of December here. So we have seen the DAX rebound last Friday. It gapped a little bit higher today, but it resumed the downtrend. I think it has filled the gap. Perhaps we could see the DAX pull back a little bit further as well before stabilizing around the pivot. Higher up, there's a nice pullback resistance at 20,302. This is also accompanied by Fibonacci retracement at 78.6%. This retracement was found by starting from this intraday all-time high on 13th of December and ending with a low on the 20th of December. Right, is there, I believe there should be another retracement that we can use, right? There's a 78.6% retracement that sits pretty close to the first support. The first support is an overlap level, right? We see a little bit of resistance here on 15th of November, after which this level proceeded to function as support on the 26th and 27th of November, creating an overlap level that we have identified as the first support, and is also accompanied by a Fibonacci retracement at 78.6%. Right, I think these are the key levels here, and let me see, we can probably run a larger retracement from this swing low on 5th of August, going up to the intraday all-time high. Let's take a look at all the fibs. Right, we can see that the pivot is also accompanied by another Fibonacci retracement at 23.6%, and at the same time, the first support is also accompanied by a 38.2% Fibonacci retracement. So let's keep 23 and 38 in the analysis here. Right, so although we've seen now 8 consecutive down days so far for the DAX, right? It could stabilize at this overlap level here over the next couple of days. Right, okay, so that's the DAX. Let's move on over to US 500. Looking at US 500, Right, this resistance I think it's a little bit too close. Although it's close to where the intraday all-time high was formed, but where the pivot has been identified, right? The pivot is a nice overlap resistance at 6,026. I believe there may be a Fibonacci retracement that's accompanied that's going to accompany this pivot as well, right? Okay, so the pivot is an overlap resistance that's accompanied by Fibonacci retracement at 78.6%, and we'll also be using the extension at 137% to help us identify the first resistance here. So first resistance is likely to sit at 6,182. Right, we can see a very nice gap up for US 500 today. It's still in the green, but perhaps it could drift lower as well. So similar to the US 30, right? Especially after last Friday's strong rebound, I was expecting US 500 to retrace a little bit higher this week, perhaps rising up towards the pivot before stalling around this region once more. Right. However, US 500 has failed to close the gap just yet, but maybe it's going to do that first before retracing a little bit higher. Now, first support at 5,851 is a swing low support, multi-swing low support, right? That's been in place since Friday, 15th of November. Right, we see the first swing low support taking place here in mid-November, and the most recent one taking place last week, right, in the second half of last week. Right, let me see if there's anything else to add. Let's see if you can run a retracement from this swing low, 6th of September, going up to the intraday all-time high on the 6th of December. Looking at all the fibs, right, we can see the 38.2% retracement sits pretty close to the first support. Let's keep that on. And one final retracement would be from this swing low on 5th of August, going up to the high here. It's at 23.6%. There is a 23.6%, so let's keep that on as well. Right, so these are the key levels here for US 500, right, after gapping higher today. Right, it's sort of in limbo. Remember, with a shorter trading hours this week, and we can probably expect thinner, very thin trading liquidity as well, or trading volume, right? Not too sure where the US 500 is going to trade. It's literally in limbo here at the present moment. And on one hand, it looks like it wants to fill the gap, but on the other hand, it looks like it's going to retrace a little bit higher towards the pivot, which is an overlap resistance. All right, so these are the key levels here for the US 500 on the daily time frame. All right, now let's move on over to crude oil, right? I forgot to touch on crude oil. We touched on gold, but we didn't touch on crude oil, so let's move on over to crude oil now. So XTI USD is the instrument that tracks crude oil futures, and we can see that after falling for 4 consecutive days last week, crude prices managed to stabilize on Friday and were initially climbing higher today as well. Crude prices initially gapped lower, filled that gap, and rose or climbed as high as $70.30 per barrel, but now it looks to have run out of steam and is falling back towards the pivot. Right, the pivot is actually a nice overlap support at $69.13. Right, and this level here is also accompanied by Fibonacci retracement at 50%. So we found this retracement starting from this swing low on 6th of December, going up to this high on the 13th of December, right? We see the 50% Fibonacci retracement sitting pretty well with the overlap support. So we could see crude prices stabilize around this level once more before resuming the uptrend. However, when you look at crude oil over this period that begins from the third week of October, right, it's actually trading sideways, right? You can see a very nice sideways channel that's been in place since the third week of October, with the lower bound at around $67 per barrel and the upper bound at around $72 and almost nearly at $73 per barrel here. Right, so you can see there's a lot of strong buying pressure or buying interest at around $67 per barrel, and at the same time we're seeing a lot of headwinds at around $71.50 and then around $73. Take note, right? Although the fluctuations for crude oil have gotten smaller as compared to the first 3 quarters of this year, right? If you look at the first 3 quarters of this year, right, crude oil prices have seen strong swings to the upside and downside, right? Like this bullish reversal from 5th of February till April, right? In a space of 2 months, this peak to trough move was as large as 24%. Then we saw a nice reversal as well strong bearish reversal from 8th of April till 5th of June, another huge 17% move, then another reversal, bullish reversal once more, 5th of June till 5th of July, so another 17% in the math space of 4 weeks, and then this big downtrend here from 5th of July till 11th of September, crude prices dropping nearly 23%. So you can see the swings have been pretty large for the first 3 quarters of this year, right? However, we can now see that the fluctuations are still taking place, but at a much lower degree of movement here. So for example, this bullish reversal from 29th of October till 8th of November, right, was a move as large as 8.7% or 8.6%, and then the bearish reversal from peak to trough was about 8.9% as well. And the most recent bullish reversal that took place from 9th of December till the 16th was as large as 6.6%. So you can see the moves are getting a little bit smaller, right? Relatively smaller or significantly smaller as compared to what we saw in the first 3 quarters of this year. However, and also at the same time, we are seeing price consolidate within this sideways channel that's bounded at $67 on the lower end and at about $72 and $73 on the upper end. So take note, crude prices are currently WTI oil is trading in a sideways channel since the 3rd of October, and that enables us to play the range as well, right? As I mentioned, strong buying interest at the lower bound at $67 per barrel, and since 22nd of November, strong selling pressures or strong headwinds at around $71.50 per barrel here. Right, so these are the key levels for XTI USD. Alright, before we continue, I'm just going to launch a poll as well. Really appreciate it if you guys can give your feedback with regards to today's webinar. Right, and do remember to smash the like button as well. Right, okay, so we've launched the poll. We've covered most of the requests by Ajay. Right, then let's wrap things up by looking at crypto, looking at Bitcoin. Right, so Bitcoin, after making its latest intraday all-time high on Tuesday, 17th of December, right, hitting as high as $108,391, we see it has pulled back quite sharply. Right, this peak to trough was as large as 15%, right? A huge move down in a matter of days, but Bitcoin looks to be stabilizing just above our pivot, right? This pivot level at 92,791 is identified as an overlap support, right? Because we see a little bit of resistance here in mid-November. We see a nice swing low bounce here taking place at the end of November, another nice bounce here on 6th of December, and of course the most recent one taking place on 20th of December last Friday. And over the weekend as well, Bitcoin has sort of stabilized above the pivot, and with today we're looking at the first green candle in 1, 2, 3, 4, 5, 6 trading days here, on 7 trading days here. So perhaps we can probably expect Bitcoin to stabilize and climb a little bit higher, because the pivot is an overlap support that's accompanied by Fibonacci retracement at 38.2%, and we can see that this coin continues to trade above the green Ichimoku cloud as well, highlighting the ongoing bullish momentum. Right, in terms of resistance, right, I see a overlap resistance at 99,518. This level is also accompanied by Fibonacci retracement at 50%. Right, we found this retracement by starting from this swing high on 17th of December, going down to the low of 20th of December. Right, so any potential bullish bounce for Bitcoin, right, we can identify our first take profit target at around the first resistance, and of course the second resistance is going to be close to where the intraday all-time high was found, and that's at around 106,450. A little bit below, right, the first support at 87,933 has been identified as a pullback support level that's accompanied by Fibonacci retracement at 50%. This retracement level was found by starting from this swing low here on 4th of November to the intraday high, and we can see that The 38 and 50% retracements align pretty well with the pivot and the first support. All right, okay. So this is all I've got for you guys today, right? Take note, it's a shorter trading week than usual because of Christmas and Boxing Day holidays, and most financial markets will be closing early tomorrow as well. That's Tuesday, 24th of December. And we should see most markets resume on Friday, the 27th as well. All right, okay. And this is what's left on the calendar for this week. Couple of things going on. Canada GDP data out of Canada later today, followed by consumer confidence from the US. And we've got durable goods, new home sales tomorrow, monetary policy meeting minutes out of Australia. And we have unemployment claims, Tokyo CPI, API crude oil inventory, or EIA crude oil inventories on Thursday, 26th of December. And also we have Bank of Japan Governor Karuzo Ueda delivering his speech on Wednesday as well. All right, that's all I've got for you guys today. All right, thanks for tuning in, and I really appreciate your likes and the votes as well. And I look forward to catching you all at the next session. Right, take care. Have a great trading week, and Merry Christmas to all who are celebrating this holiday as well. All right, take care, everyone. Have a great trading session, and catch you all at the next webinar.